Hey guys, we're talking about incentive stock options today. Had a really interesting potential client reach out to us here over the last few days, and just want to talk to you a little bit about the importance of incentive stock options and wealth creation. As I mentioned in my LinkedIn post today, the best time to exercise ISOs was yesterday. The second best time is today. Now, that's a broad oversimplification for sure. There are for sure reasons to hold off and wait on incentive stock options. But the key there, kind of the shock value of that headline, right, is that you really want to know what your position is in relation to those ISOs and know what the tax considerations are around those and be really clear, about how they can impact your taxes and their potential value for wealth creation. The interesting client situation that we had yesterday was a client that was at a pre-IPO company. They went through some financing rounds in 2023. They exercised some of their ISOs in 2023, which is great, which we'll get to here in a moment, and some additional ones in 2024. They're coming to us for advice this year, potentially related to a really heavy AMT tax bill that they're expecting for 2024. And that's because the value of the company has grown over time. It's now worth quite a bit more than the strike price on their incentive stock options. And thankfully, they exercised a bunch of them before the price went up even higher. But let me tell you a little bit about the facts of their case. So, a little bit of AMT generated in 2023, about $200,000 of AMT that we're looking to generate in 2024, and potentially a $2 million long-term capital gain if they were to sell at today's rates. So that sounds really great, right? That's a great outcome. But what if I told you we could have probably avoided most of the AMT and we could have avoided income tax on the entire $2 million in long-term capital gain? Like, wow, that's a lot of tax. It's hundreds of thousands of dollars. This is a unique case, but not uncommon. The company was considered a qualified small business stock back in 2023 when this couple exercised their first round of options. So that's good, right? We've got some stock that qualifies for QSBS. If you're not familiar with qualified small business stock, it's one of the really neat areas of the tax code, and it enables you, under the right circumstances, to avoid federal capital gains tax on the entire proceeds of a sale. And that's amazing, up to $10 million. So in this case, this couple, if the facts had been redrawn a little bit, they could have had $2 million of stock value completely tax free. And probably AMT tax free as well if we'd have done some planning back then. So it's really important to know how incentive stock options work, because the clock is ticking on those. Um, you know, if things go well at your company, the valuation is only going to increase over time. Of course, we've got plenty of circumstances where that's not the case, and you got to be careful with ISOs for that reason. Money that you put into incentive stock options to exercising those shares, that can be lost. And if you pay AMT, it can be really hard to get the AMT tax back in those situations. So you got to know your circumstances and be comfortable with the risk involved with them. But in this case, you can see the value of saving several $100,000 of federal income taxes and state income taxes for that matter. A lot of value there. So um, just another example. If you have incentive stock options and you don't understand those, please reach out for help. That's what we're here for, or if not us, someone else. They're really great potential value, but you got to know what you're doing with them. So, just a quick example of that today. Obviously, if we can help out there in any way, please feel free to reach out on our website, johnmccarthycpa.com, and set up an intro call. Thanks.